What's up? This is Damon from StockBarometer.com and the Gap Game Plan. I'm going to be introducing the stock picks for the next week, which is the 29th of June all the way to the 3rd of July. Here are the 5 stock picks, and this time I'm going to be working backwards to save myself the time of typing these tickers into the boxes of these 3 analytical tools that I like to use. So the first tool is Yahoo Finance. When you go into the interactive chart on the left, you're going to want to switch to the candlesticks, and you're going to want to change it to 1 month because that gives us the candlesticks for each day. We're also going to be using StockTA.com, which gives us a nice way of looking at the support levels, and it also tells us of the Fibonacci's, which can be useful. And finally, we're going to be using Sharp Charts, StockCharts.com. I don't know why it's called Sharp Charts at the top, but it's StockCharts.com. And at the bottom, you're going to want to switch to slow stochastics and a rune for the indicators. Okay, so let's start with a ROVI. ROVI is on NASDAQ. What we are seeing is this play is actually almost a pure support and volume play. In the past, we had a area gap which filled, and I could have predicted that, but it wasn't big enough for us to get in on. What we saw was kind of a fight between the bulls and the bears to establish a resistance level around this point, and I believe that number is 17.49. So that was switching between a resistance and a support level. Now we can see it's clearly a support level because we're above that value. We are at exactly 17.52. So why are we getting in on this stock? If this resistance and support keeps switching back and forth, what makes it a safe play? Well, first of all, we've got a bullish engulfing candlestick, which is after a downward trend, usually indicative of a coming bullish trend. But more importantly, look at this volume down below. This volume is way larger than anything we've seen in the past month, and I think it's larger than anything we've seen in the past probably year. This is the largest volume that this stock has ever seen. And as you probably know, volume precedes price movements. So if we have a huge level of volume, it's very likely that the stock is going to go upward if that volume is composed of buyers. Now, in this case, that huge volume brought us just above that support level, and it's very likely that we will continue upward from there. If you want to do analysis on volume, you can also use some volume indicators such as the accumulation distribution line, or you can use the where is it? The on balance volume indicators, and I'm going to let you look those up yourself. But just for now, I'm going to say get on ROVI. By ROVI, it's likely to go up. We're above a support level, and that support is likely to hold. The next one is FOLD, FOLD. See how easy this is? I just click back instead of having to type them in every time. So here is FOLD. Here's what happened. We had a gap that looked like a continuation gap because of the large volume and the candlestick being outside of the trading region. However, that gap did not hold, and this is why I always recommend that you don't play on gaps alone. You watch the candlesticks for at least 2 days before making a gap play, and I teach that in the gap game plan, so if you're interested you can check that out. But as you can see, that gap did not bring us upward. It actually fell and filled. Now what we're seeing these days is, first of all, we had a very bearish 3 candlestick prediction right here. You can see we got a green candlestick and then a red candlestick above it and then a bigger red candlestick down below. This is what looks kind of like a bullish star, a morning star, but it's not a doji star. So it's very close to a bearish morning star candlestick trend, which predicts a coming bearish trend. Unfortunately, well, not unfortunately, but against our expectations, what we saw is a doji star. Now, a doji star tells us that the investors or the traders don't know whether to buy or sell. And there's a kind of, you can say there's a tension between the bears and the bulls at this moment, and it holds until the next day which often is another doji star. As you can see, a couple doji stars here, a couple doji stars here. Doji stars usually predict more doji stars until a breakout occurs, and when that breakout occurs, it tends to hold for quite a bit. You can see it move from all the way from 12.14 all the way to 14.5. So that's quite a good gain if you got in at the very bottom and got out at the very top. What we're seeing now is that the doji star did not have another doji star after it. Instead, it had a green soldier candlestick after it, which predicts that the result of this doji star trend was the bears losing. So based on the candlesticks, we could say, first of all, we probably have a bullish trend coming, but more importantly, look at the volume. Huge volume, and volume predicts price action, so it's likely that the stock is going to go up. But let's check the support just to make sure. We don't have any support levels below us, but we also don't have any real resistance levels above us. We are at what looks to be an all-time high. And what about the Fibonacci's? The Fibonacci's are bullish, so even if this stock does fall a bit, it's likely that it'll climb back upward and retrace that trend. What's probably most interesting is that if you watched this stock for a while, you'd see that it started to move up in a bearish or bullish trend for quite some time, for like a month's worth of time. That happened when the Arun lines crossed about here. So this would have been a good time to get in on the stock. However, if you notice the stochastics, they're above level 80, which means that the stock is probably overbought. And it's a dangerous time to buy a stock when the stochastics are above that 80 line. So what would have been nice would have been to wait until the stochastics dropped below the 80 line and then got in. But when that happened, the red was above the black, which usually predicts a bearish trend. So we've got a bunch of mixed information here. Now, why am I going to recommend this stock? Well, we're not above 80 anymore. The stock is looking like it's trending, but most importantly, look how far the green Arun line is from the red Arun line. They couldn't be further apart. Green is at 100, red is at 0. So as you can see, as the stock kind of leveled out and dropped a bit, the green Arun line dropped a bit. And that's not a time you want to be buying a stock, especially when it's under 70. But now that it's bounced back, it's very likely that this stock is going to see new highs, and it's very unlikely that it's going to drop down to where it was before. So we can say pretty safely that this bullish trend is still in place, and while you won't be getting in at the best time, and we probably wouldn't have done that because this is not a very common pattern to have a stock moving up all this time while the stochastics say it's overbought, but you will still be able to get in at a bullish trend, an overall bullish trend. So this would be a good stock to get in on. We do have a small level of support. It's not very reaffirming, but you know, it's at least telling us that we have a lot of support levels below us, and we're probably not going to fall too much. And if we do, because of the Fibonacci's being bullish, we're likely to bounce back. So this is one of those trends that's in place and looks like it's still in place, and you can probably reap some profit by buying in. That's fold. Moving on to this Schwartz. SCHW. This is the Charles Schwab. I always mix those two up. All right, anyway. So this doesn't look too good, does it? It looks like we're kind of bouncing back between 33 and 33.5. We had a gap that looked like a breakaway gap. Unfortunately, it was a red candlestick, which means that the breakaway gap is probably not going to continue upward. It's probably going to stabilize. And this is also a really good time to play a sideways options strategy because the volatility has jumped. You can usually sell for example, you could sell a iron butterfly, or you can sell an iron condor and make quite a bit of profit because of the higher prices. But this is a stock tips newsletter, so we're just going to be talking about what to buy. Now, why are we going to buy this? Why is this showing signs that it will go up and not just continue to be stable? Well, first of all, we're right above a level of support. So that level of support was 33.21, which we were actually below for quite a while, in the past couple days. And again, we're seeing this same candlestick pattern that we saw before. This is almost the exact same thing as the last candlestick, or what was it? The last stock was it Rovi? Kind of hungover today. But you can see we have what's called a morning star candlestick. It's a bearish candlestick, and usually it indicates a price drop. So at this time, you probably would have bet that the gap would fill. But unfortunately, well, not unfortunately, again, in contrast to what this was predicting, we saw a doji star, and the doji star broke with the bulls winning. So it's likely that we have seen a real level of support put into place at about 33.21, and it's going to hold. So we are buying above, right above the support level, which is usually a very safe buying strategy, and that's the main reason I am predicting that this stock is going to be one that not only holds at this level but grows. You can see the Fibonacci's are very bullish. All the indicators down here are very bullish. So if the stock does drop a bit, it's very likely that it will retrace its steps and go back up. Anything interesting here? Nothing really. Okay. So that is the Charles Schwab Corporation. Let's move on to OPK. All right, OPK, biotech. Biotech's always a good speculation for people who want to make money, especially on penny stocks. But this one's not doing so well, is it? So we've had a very bearish trend for quite some time, and only now do we see a decent candlestick, which has brought us above this kind of evened out area around 15.5. And that has brought us right above a level of support. So, like a smart investor, you're going to want to buy above a level of support. And that's what we're going to be doing here. So, what else do we have here? All right, here's another important technique to buying stock. If you see the stochastic lines below 20, it means that the stock is probably oversold, and it's usually a good time to buy, but you don't want to buy right away. You want to buy when the black line crosses, let me zoom in here. You want to buy when the black line crosses the red line and starts to move out of the under 20 area. And that's exactly what we're doing with OPK. So we've got two really great indicators here. We've got a support right below us, and we've got the stochastics telling us that the stock is oversold and is going to start to reverse. This is a very strong buying signal and very reliable in my experience. That is OPK. Very good play, at least for the short term. And I'm going to look at the last one, which is WMB. All right, I guess I didn't check that. Okay, so here's WMB, and, well, this is completely wrong. Yahoo kind of fucks up when there's a gap. Let me show you. Here's what happened. We had a tiny doji star way up here. It was not a day where people bought at a very low point and then, you know, the stock jumped all the way from 48 to 60. That did not happen. The stock opened at 60. So when the stock market opened, we had a doji star. This is wrong. And the doji star was followed by a winning of the bulls. So winning of the bears. So what happened was some news event probably occurred, as you can tell by the high volume in the gap. We've got a gap that's way out of the trading region and a high volume. That implies there's some sort of earnings report or some news that came out about WMB that brought the stock to a new high, but the opening price and the closing price on that day were the same. So people did not know whether this high could hold or whether it would fall. Now the next day it started to fall, and the day after that it fell as well, and the third day it also fell. And finally we see a reversal of that trend. We see a day where the stock went up, and actually this candlestick almost engulfs the previous candlestick. So that's a bullish engulfing pattern, which is quite reliable after a bearish trend. So we've had a bearish trend in the past 1, 2, 3 days. Then we see a bullish engulfing candlestick. Just based on candlesticks alone, if you're going to be swing trading, this is a good buy. But we don't have any resistance or supports to tell us whether there's going to be a wall above us or below us to protect us or to stop us. However, we do have a very bullish Fibonacci indicator, which tells us that the stock usually reverses its bearish trends. So if that happens, then we're likely to move from 57.12 back up to 60, and you can reap a decent amount of profit. That's what, 6% profit. Anything interesting here? Well, we are out of the overbought level, so it's safe to buy, and the rune lines don't really tell us much. So basically, just based on the candlestick alone, I'm going to say that this is a decent candlestick swing trade, and you can probably reap a quick 6% profit on this play. So that's it. I'm going to leave the stock picks up for a second so you can look at them again. And if you have any questions, leave them in the comments section below.